Elon, please. Yeah, this is Marko from Hoot Loot. It's Marko from Hoot Loot. It's not, no, you idiot. It's not Fruit Loops, it's Hoot Loot. Oh, gee. Hello? Hello? Oh, that was a good use of time. Welcome, everybody, to Markonomics 101 presents Hoot Loot, or maybe even Hoot University. Today's going to be much of a teaching show. You come here, this is your major destination to be informed, be amused, but never be misled. We're going to give you the information you deserve. What you just saw was the fact that Elon Musk is no longer talking to me. Thank God. But we have some amazing charts. If you would do like and subscribe, please. This is going to keep you out of trouble and show you how to fish instead of fishing for you. You know, teach a man, give a man a fish versus teach a man how to fish. All right. So with that, we'll be back with the charts in just a second. Hi everybody, we're back with the charts. I started off with somebody else's chart because this one actually paints a picture that is really, really interesting. A guy named Jeff Gundlach, who's considered the bond king, he's very well respected. He put this chart together. It was featured in a in a website, and you notice that this thing is the ratio of the S&P, or the NASDAQ to the S&P, and look at that, we're to the point of the dot-com bubble. Okay, say no more. Yes, Jay Powell doesn't think we have a bubble, but we do. And that's proof of it right there, and a proof of also how short of a time last time that bubble spent in this kind of territory. We are at very rarefied air, and this is another way of looking at that. This is another chart prepared by Bank of America, of all people. But the interesting thing about this one is that this chart shows that the main buying thrust of the market right now is corporate buybacks. Now, if you think about it for a minute, these are the same people that are buying their own stocks back and yet asking for bailouts at the same time. Well, apparently that's going on with Boeing and American Airlines. I'm not sure what you think about that. I find that a little bit on the not ethical side. But anyway, that's where the buying has come from. They have also not been very good market timers. That's the other thing about this, is that they tend to buy at the high and they tend to sell at the low. And like General Electric almost bankrupted itself by buying its own stock. They were so anxious to get their executive compensations higher. Anyway, so we go to the Dow Jones Industrials. And Dow Jones Industrials, we've got a combination of two things. And I'm going to slow down and talk about why I decided to pick certain things, okay? This one was actually kind of hard because it really didn't have a trend channel. It had a little bit of a parabolic run there and sort of a flat top. I'm not sure what to make of this other than the fact that, this is one of those that's kind of a nebulous chart where because of the compression of the movement, you can have a sell signal pretty close to the top, and that's kind of what I like about it, is that this thing breaks that little parabolic uptrend. It has a long way to go, let me tell you. All right, so on the NASDAQ 100, we have something here called a triangle, okay? Now the triangle is a series of lower highs and a series of higher lows, so they form a triangle. Normally, an uptrend is a series of higher highs and higher lows, okay? That makes it an uptrend because it's stair-stepping higher. A downtrend is lower highs and lower lows, so it's stair-stepping down. Those are kind of the basics, and we're going to look at a lot of the basics today. But the NASDAQ is kind of up to almost breaking positively, and scan through the charts, and as much as I hate to say it, the NASDAQ is looking a little more strong than I thought it should at this point, but we'll see. The S&P 500, okay, we're gonna focus on a pattern that we focused on a long time, the rounded top or the rounded bottom. Why do we focus on this pattern? Because it's basically like a parabola, like that. Okay, so in other words, if you throw up a baseball, it would kind of go like that, and that's kind of how stocks act. Here you have that pattern represents a slowing down of the uptrend and a increase of the downtrend. And if you're a mathematician, it's a first derivative that's a positive and a second derivative negative. But the whole point is, it's just like a baseball. The acceleration is down, but it's rounded. You have to sort of spot it. And that's the hard part, is spotting the exact rounded top, because sometimes they mislead you. So I'm actually going to show you some of those as we go through this. The S&P Small Cap Index. Now, these have been phenomenally strong, more than 100% over the last year. But notice it breaks a trend line, and then it forms a rounded top. Again, they don't tend to break positively, but sometimes they do. We're gonna watch. But this one is starting to slow down, and again, I think we have higher interest rates to have affected that. Dow Jones Transportation Average. This is not in a familiar pattern. I just put it on there. This is called the reverse wave. We'll talk about that another time, but transportations are still strong. There's more economic strength showing up in the charts this week than there was last time. So now, 5-year Treasury yields. We've been talking about these, bond yields going up. Now, this is, again, a rounded bottom. So what you're seeing here is like something, it's like an upside down parabola. It's kind of slowing on the way down and rounding like a saucer, like a dish. And it tends to have like a resistance line. You see it going across there at about, 65 basis or 55 basis points. And look at that thing now. It's almost at 1%. All right, it was at like 20 basis points not all that long ago. So believe it or not, this very safe and short-term security could have been very deadly. But the rounded bottom and the breakout told you, or at least suggested, that it was highly likely it would go up. And this is another successful case of that. Okay, 10-year treasuries again, rounded bottom, parabolic uptrend, same kind of thing, except a different level. They were up again today. All right, they were up again today. They continue to go up almost on a daily basis, and that's the thing you've got to watch out for, because the cracks are starting to show up. But this is the important thing: rounded bottom means upward acceleration, downward deceleration, and therefore it happens over a period of time, and then it's ready to go up. As the selling pressure has been reduced, the buying pressure has been increased. Here we have 30-year Treasury yield, same thing. Rounded bottom, perfect, beautiful, accelerated uptrend. And I'm going to say this right now. These are going to be the hardest on high multiple stocks right here, because interest rates are what determine value. Okay, the higher the interest rate, the lower the value of an asset. Now, that doesn't make interest rates bad. It just makes assets go down, and the Fed has been keeping interest rates down to make assets go up. Well, that can only last for so long, and we're seeing that at a very quick termination, I think. Copper Miners ETF. Now, this one is kind of an inflation type of predictor. Again, rounded bottom and a parabolic uptrend, but broke down. So that may mean that inflation is, not surging quite as much, or the market's ahead of the game, which it usually is. Because look, it started to rally. It's been rallying for a year. We're only now seeing, inflation is more showing up in the last couple of months. We've been pointing it out ourselves on Inflation Nation, a few other programs, but this thing was screaming inflation way back when. Gold. Okay, now gold is so important because it is basically a replacement for the dollar. It also has liquidity. You can sell it quickly. You can raise money with it, and that's why I think it's going down, because there's a liquidity problem in the market when rates go up. Rates don't go up. Rates go up because there's illiquidity. That means more people want to take money out than put money in, and that's a sign of growing illiquidity. And the growing illiquidity is growing and going to be a problem, methinks. So this has a little bit of a rounded top in there itself, and looked pretty good until it didn't. This one here on a monthly basis, you see a beautiful saucer rounded bottom on this thing in green, and you look at that. It broke above that, behind that parabolic uptrend. Okay, when it broke it, it was done. When it sort of consolidated into a saucer bottom, and even though it's been a little under pressure lately, it's done pretty well since then. The Invesco Agriculture Fund is a great place to see about food prices. I know they're getting more expensive here, that's for sure. Ace's dog food is getting a lot more expensive, but this one also has been going up for a long, long time, and the food prices lately have gone up. I think the market anticipated it. Maybe it's anticipating a surcease in that. I don't know. Now we're going to go to some of the big cap stocks. I call them the mega caps. Apple. Well, we've kind of changed this. This one had a different pattern before, and it didn't quite break down, but this one's right on the cusp of what is a triangle. You see the triangle on that in red, and basically a triangle is again a series of descending highs and ascending lows coming to a peak. And at that peak, it breaks up, breaks down. Usually that's the direction it continues in. So that's why it's a very good pattern to keep an eye on. Amazon. This now is what the market looks like. Everything is horizontal. And now Amazon, all of a sudden, horizontal. It's no longer broken down. It's actually, I don't know whether to call it bullish or bearish, but, break either way. Amgen, same thing. Another big cap, biotech company. Look at that. It is absolutely in a sideways pattern. And Facebook, too. Facebook looks to me like in a sideways pattern. It's been getting, it's bearish below 250. I put, sort of where the numbers would be. I think it was 300 for the, the buy side. Although you would not be buying cheap, you'd not be buying low, you'd be really buying high and hoping for someone else to buy even higher, like me. Okay, so there we go. And this is Grubhub. Grubhub is another one of all the rage. The people that deliver nothing for 3 miles, and they're worth a ton of money. I don't know where the hell they get that one from, but again, look at that perfect rounded top. That is just like picture perfect. It breaks down, and normally, okay, a very, very likely occurrence is a snapback, right back to that line, to the breakdown line, and it did exactly that and then broke down further. That's what you'd expect. That's what happened here. And the target typically is the distance between the peak of the rounded top and that line, that horizontal line. That usually is the target to which it will go in the direction that is predicted. It's kind of a rule of thumb. I wouldn't count on it, but that's kind of what I look for. Microsoft also, again, rounded top, possibly, and it's getting really close to breaking its trend line. It's been doing very well, but that's the thing, interest rates go from 2 to 8, and multiples are going to go from 45 to 15, and that's a hell of a hit to take in the stock when the stock may not have done a damn thing wrong. The company may continue to perform, but the assets were worth less, and that's what I think is happening. Netflix is another one of those in a horizontal pattern. Look at that, sideways. Nobody knows which way she'll go. Nobody knows. Not even the magic 8-ball knows, or crystal ball that I have. Neither of them know. So anyway, Netflix, going nowhere. Nvidia, now I call this a bear flag. Now why is it a bear flag instead of a sideways flag? Okay, because it's leaning ascending. And when it's leaning ascending, its chances of breaking down are higher than its chances of breaking up, because it's already in an uptrend, and now it's going to accelerate. That's less likely than it breaking down, and it being a sign that it's just run out of gas. So that's kind of why I would call it bearish. And that's kind of a judgment call. Honestly, it's not something that you would naturally be able to define or measure. It just comes with experience and all that. This is Qualcomm, again, another one of these rounded tops. It is a very accurate pattern. If you've looked at some of this, we're going to see some that didn't work exactly, but that's not a bad looking pattern if you can spot it and then utilize it and then take advantage of it. Okay, we've got Tesla. Oh, geez. Well, thank God Elon will be calling in. But look at Tesla. It's got 2 rounded tops, one within the other. So Tesla's coming down in a hurry, and it's already lost from its peak to its trough about a third, and the Nasdaq is down about 6-7%. Tesla's down a third. Tesla is the canary in the coal mine. Every cycle has one of these. It's the hip, trendy stock, like Bitcoin is now, worth $1 million. Well, anyway, Tesla, my good friend Elon thinks that the company's worth $3 trillion. We'll see. And speaking of which, I got to tell you a little bit about. I did some research on SpaceX, the next IPO, and when we get to Goldman Sachs and all that, I got to tell you about it. It's just incredible. Uber, again, it doesn't have to be exactly level, but it's still rounded top, and it's still, you can see a diminishing buy pressure and an increasing sell pressure, and eventually this thing will roll over just like that ball that we put into a parabola and we threw up. We threw up like, no, not like that. We threw up in the air, okay? Just to be clear. All right, this is the broker dealer index, and these are the guys that probably were the last holdouts. And looky loo, they've just kind of broken down a little bit. But who knows? You can make a lot of money with SpaceX, $74 billion and $95 billion with Stripe, and that's a hell of a lot of commissions. So, especially for something. Never mind. All right, so the semiconductor index also once again a rounded top, and again it is really close to breaking down, and a lot of strength is left in this. And there's a chip shortage. Apparently, everybody says it, so they're bolstered by that. Although I don't know how hard it is to manufacture more chip capacity, but again, rounded top, rounded top, rounded top. They're very good until they're not. Okay, this is Boeing. The reason I put Boeing in here is because Boeing is sort of the nerve company of the week. All right, here's a company that wanted to be bailed out, okay, while their executives are buying their stock. Okay, I don't know how to explain that, but, I just draw a big red circle around where it kind of broke out and then broke down and then broke out and then broke down, and I wouldn't necessarily touch it. Costco Wholesale, now this is again a rounded top, a breakdown, okay, and a snapback all the way to the breakout point. Now that's entirely possible, and if it goes much higher than that, I might cut bait. It did go down quite a bit, and there was a place to take your money off the table before the table takes your money off of you, if you had gone short Costco, but it's come back up. So I don't know. This one, could come back, it might not come back. Oh jeez, who's? Hello, Elon. Still talking to me? What a nasty cough! I told you to switch to vapes. You sound like, oh God, you sound terrible. Well, no, I am not defaming you. I am not, misrepresenting your achievements. SpaceX going to Mars. Come on, this Mars. Yes, I know it's fun. I know. But you're fleecing people with that. You gotta feel a little bad about that. Come on. I personally don't find that funny, really, when it comes right down to it. Are you going to Mars? Huh? Are you going to go on one of these flights that keep blowing up? Elon? Oh, well, I guess he can't take the heat, so it gets out of the kitchen. All right. So we're going to go to Stellantis, and the only reason I have this one in there is not because I love the praying mantis similarities, but this one broke up out of a rounded top, or what I drew as a rounded top. Obviously, though, when it broke out, that's exactly when you would have never gotten into this. In other words, the graph is sort of or the drawing is a hypothetical. It never actually completed a breakdown, so you'd have never really, bought on this one. But that was a wrong call. FedEx also looks like a wrong call, and I'll tell you this: I don't really understand, but there's more indication of a stronger economy than there was even a few days ago. So that's the part that I'm finding somewhat interesting. And a lot of these charts, the breaking up in some of these charts is telling us that. All right, this is Home Depot. Now look at that one. That was in a horizontal pattern. It's a big retailer, and all of a sudden it breaks down, fools you, breaks back up. That's Mr. Market for you. He's Mr. Con Man. We'll tell you about him another time. But you have to watch out for something like this, because this is what makes this imprecise and art instead of science. Is that all you can do is set up good odds and set up a discipline where you get the hell out when things don't go your way. And this would be one of them right there. This is IBM, and it broke up. So it's in a horizontal pattern, broke up. So there's some strength in the market there. Here's an example of it. Nordstrom's. Now this one looked like it broke out of a rounded top. But if I were to redraw this, it looks like a bigger rounded top than the one before. So it's actually still in a rounded top. I didn't draw it on there, but this one looks like it's in a rounded top, or we can redraw it because it went all the way back to the support line, which shouldn't have happened. If it broke out, it should have gone higher, like Stellantis, the praying mantis company. All right, Nike again, Dow component, consumer products. Don't look too good. Looks like it's about to It's about to hit the Grim Reaper, or Reaper. I'm sorry, Grim Reaper. Procter and Gamble is another one that it looked like it was in one, broke down, and surged back up. So again, here's some. I'm showing you these on purpose because I've shown you them before and said round to top, round to top, round to top, and here's where it becomes a matter of odds. And most of them work out. Some of them don't. And same with Target. Target, basically, you've got a breakdown from a triangle this time, and it looks like it might make new highs. That I would not have expected, but it's a matter of odds. UPS may be breaking out from around the top. Maybe didn't really quite break down, but it also could be a longer and wider rounded top. In other words, you can still see a series of slightly lower highs and making it just a bigger dome over it. But it's still a bearish pattern in general. This is not good. But we'll see about what happens. Walmart Shoppers, another one. Again, retail, big time for the economy. 70% of GDP is retail, and you got Walmart breaking down from a rounded top, as if we didn't have enough of those. And it rallied weekly up to the support, up to the breakdown line, but didn't quite get there. And I'd suspect that Walmart's not looking all that good. So with that, I want to thank you very much for tuning in. Those are the charts, and I hope you got the rounded top part down and the ascent and the accelerating uptrend. The reason that's important, again, is because you are getting people who are more and more desperate to own the asset, and that means that there are fewer people to sell to. There's more and more buyers, and there's nobody to sell to once everybody's bought in. So anyway, we will see you next time on Saturday. This is Hoot Loot. Please like and subscribe, and we will see you next time.